Well, good afternoon, good evening, everybody. Thank you for staying here until we've come on. Hopefully we've left the best panel to last. We are very conscious that we are the last panel before the drinks and people are thirsty, so we plan to send you into the drinks with hopefully a final burst of energy for the day.
Regulation!
So I'm a partner at Baker McKenzie. Mark, it's a pleasure to be here. Thanks to Innovate Finance for organising this. We're going to be focusing our panel on the regulatory environment in the UK, hopefully a sufficiently exciting topic for this time of day. We're going to be focusing particularly on how regulation can be used not just as a constraint, but increasingly as a competitive asset shaping where capital flows, where firms choose to build and how quickly new products reach market. And we want to explore whether the UK is using regulation sufficiently strategically. So we're going to start by looking at some of the government's current initiatives and the evolving policy environment. We'll discuss a bit about how people are experiencing it at the operational level, and we're going to look at how we compare internationally. So I'm going to briefly introduce my panelists. So we're delighted to be joined by Rebecca, partner at FGS Global, where she brings to bear long experience in law and public policy, advising clients and investors on global regulations, and previously held roles at various other consultancies and trade bodies. We've got Chrysty, the Chief Legal Officer at Block, where she leads the global legal, regulatory and public policy teams and has flown all the way here from California just to be with us today. So thank you, Chrysty, for that. We've got closer to home Alex. We've got CEO of Salad, UK digital lender, and before that was at Klarna and at Close Brothers, and so brings a lot of experience investing into and scaling FinTech businesses, and also serves as director for the Centre for Finance, Innovation and Technology. We've got Portman, co-founder of Stream, workplace finance platform, recently successfully raised its Series D, and also founded various other startups and social impact initiatives. And Nitesh, Chief Risk and Compliance Officer at Moneyfarm on the far side over there, award-winning European digital wealth manager, founded in Italy with large London operations, and Nitesh leads on ensuring regulatory compliance, public policy engagement, and previously held other senior FinTech roles. So without further ado, to move into the first topic. So, Rebecca, could you perhaps help us set the scene? How would you best summarise the current government's approach and priorities to policy making in this area? And what are some of the things they're doing well? What are some of the things they can perhaps improve on further? And how do you feel they're striking the balance between innovation and consumer protection?
Thank you. I mean, I think before we get into regulation, it is actually really important to start with thinking about the government and the policy environment and the political environment. Because so much of what we're seeing now for investment appetite, but also business confidence, comes not just from the kind of the classic tropes of stability and certainty as to what the agenda is going to be, but the messaging and signaling that comes from our politicians. I'm struck how quickly that appetite and attitude towards messaging flips now. Last year we were all sort of feeling slightly sanguine about how rapidly the US were going to approach their digital assets regime, how much progress we were going to see with Genius and Clarity. We've all just come back from the US over the last week, and we're all hearing very clearly that Clarity's stalled, and we might not indeed get any clarity until the end of the year when it comes to how the policy agenda is going to progress on that side. And it's a sort of really important reminder that how politicians show up and the way that they approach this conversation has a really important impact on investor appetite and sentiment, but also it sets the culture and the approach for our regulators. And I think some of what the UK is getting right is we're having a very candid conversation about the need to change risk appetite and the need to allow there to be risk in the system, both for consumers, but for investors and for how we scale up. And that is creating space to be more innovative. But I also think we have to think about making sure that we don't have knee-jerk reactions that damage that conversation, and that conversation moves from being rhetoric into policy substance. So when we get commitments like we had today, where we get the next iteration of policy substance, lots of what's been published by the government today, either across the payments agenda or the crypto agenda, is moving or sort of nudging along policy commitments that were made here 1 year ago, 2 years ago. And making sure that that sentiment is continuous and constant and stable is really important, but also making sure that it is implementing at pace and provides clarity is just as important. And I think that's maybe the piece where there's still a little bit more for the UK to do, where we can build on some of the positive dialogue that we've had on the secondary objective, on the progress that's been made. But now we have to think about how important execution and implementation is. And that's not because policymakers are at fault here in doing it, but we now have a Whitehall that is on a 20 to 25% reduction of staff across government, that has to have an impact on the pace of innovation and the pace of change. And so really thinking about prioritization so that we change the things that matter and are really going to move the dial for firms, I think is an area where we need to keep on looking at how we're doing it.
Thank you. And Alex, maybe your perspective would be interesting. You're in the consumer finance space. There's been quite a long process to change the rules in that area. To what extent do you feel we're getting the balance right between, speed, to Rebecca's point, and getting it right? Are we moving fast enough?
Well, I'm always going to say no, we're not moving fast enough. But I think to build on Becca's points, I think when you think about, for me, in terms of the purpose of regulation, particularly in the consumer space, is to drive ultimately good outcomes for consumers and to provide those safeguards. And actually, I think that has to go hand in hand with innovation and competition. And I actually think innovation and competition, if you look back over long periods of time, it's probably been one of the biggest drivers actually of good outcomes for consumers. You think about more competition, whether it's in banking and consumer banking, or you look at more competition in the utilities space. Actually, the innovation that comes from competition raises the bar for all providers, ultimately drives better outcomes for consumers. So for me, we want to create a regulatory environment which is fundamentally enabling more innovation, enabling more competition that will then drive better outcomes for consumers, but also have those guardrails for either bad actors or where things go very horribly wrong. Now, again, to build on what Becca just said, I think one of the challenges we've had in a UK consumer lending space, say specifically, has been around regulatory certainty, and whether that's, we've spent a lot of time talking about buy now, pay later in the past. I spent a number of years, trying to drive that forward, as have many people who've been here today. Ultimately, I'd rather actually have poor regulation than regulatory uncertainty, strangely. I think fintechs and lots of people here today, what they've done really well is to build great businesses, great products, and drive lots of innovation around quite poor, outdated regulation and find ways to make it work in the interests of consumers. So actually, you're always better off having poor regulation and working fast and well around that than having regulatory uncertainty where you don't know what to do and you end up in a sort of a paralysis because you're second guessing, will this innovation be accepted, will it not? And then also, I think, and you'll have experience of all the success of fundraising, is it's hard fundraising when there's regulatory uncertainty. If funders want to have all the list of their risks and how they're mitigated, and where you have elements like regulatory uncertainty, it's hard for us as leaders of business. They're risks that we can't control or necessarily mitigate ourselves. So for me, I think trying to drive an agenda where innovators, disruptors, entrepreneurs, fintechs can run at pace in a regulatory environment which is more principles-based, less prescriptive, allows a level of flexibility, innovation, I think will be best for the UK.
Thank you. And Chrysty, maybe it's a good time to bring you in, from an international US headquartered organisation, investing in the UK, having to comply with new rules. How is your experience dealing with that? And, as someone from outside the UK, how are we trending?
So at Block, we've got offices, and we operate in the US and Canada, Japan, the EU, Australia, which gives us a whole lens of different ways to look at regulation. One of the things I really appreciate about the UK is the predictability and certainty that we're driving for, and the principles-based and outcome-based perspectives. Having things like a regulatory sandbox is something I wish we would replicate in the US. It gives us the ability to collaborate early with regulators, to test what's out there, and think more about outcomes-based as opposed to how something may be playing out, which comes into play in the BNPL world, in digital assets, and a number of things, particularly with emerging technologies. So that's something that I think has been really helpful for us.
And Nitesh, just picking up on this point around principles versus prescriptive rules, so what's your perspective on that in terms of the way the UK's evolving with its sort of post-Brexit approach, and how that contrasts with the EU, where obviously you guys have got big operations as well?
So it's actually interesting here, Alex, say having minimum viable product for regulators. I think that's what your tagline should be. And I think in some areas we've actually done it quite well. So when we talk about things like the AI Act, EU AI Act is very prescriptive. The FCA has said, no, we've set the principles. You work it out. It is an MVP for AI, effectively. So I think they have listened in that space. And to pick up on Becca's point, they are listening. The fact that we had so many regulators here today, so many decision makers, policy makers here today, listening to the industry just shows that they're actually very engaged. And you're right, they can always be better engaged, but I think compared to other countries, they are very engaged. I think in our world, one of the big differences we see is things like complaints handling. So we have an office in a branch in Italy, UK, and we treat all of our consumers very, very fairly and all complaints fairly. We love consumers. I mean, I am a consumer, so that's how much I love consumers. But how the FCA and FOS react versus how other countries react means in some ways the customers actually got, they've got a massive advantage of being in a UK customer, and that does cause challenges. So I'll give you an example. We have customers who effectively hold us to ransom because they use AI to understand what it would cost to go to FOS and say, unless you give me X amount, I'm going to FOS, which is unfair for the customers because the one that knows the limit gets the most amount of money, but it's also not right for how we operate as a business and an ecosystem. So I think that in some ways we've gone a bit too far, and in other ways I think we are acting the right principles.
Thank you. And Portman, maybe just come to you next. How have you found launching various products in the UK and engaging with the FCA? Do you have perspectives on the sort of framework, how it's working from your perspective?
Yeah, I mean, I think I'm in the minority of FinTech founders that likes the principles-based and likes the fact that there's not hugely prescriptive rules. We started a business, created a new thing called flexible pay, earned wage access, on-demand pay. There was some questions as to, is that within the perimeter or outside of the perimeter? And we've always had a great engagement with the FCA, and they sort of look at it not by the rules, but based on the outcomes, which in our case were always very positive for people. So I think it works really well. I think principles-based can foster quite a lot of innovation because you can kind of just set up shop and start doing things, right? Like we literally, established a business and started giving people money after they clocked out and said, we don't need a license, we don't need it because it's their money that they've earned. So I'm a big fan. Obviously, I'm a little bit biased. The other quick point on that is to Nitesh's point of sometimes it just takes some time. So we established the business. We went several years just doing it, and then there was something called the Woolard Review on buy now, pay later, and our business model of flexible pay that came 3 years later and sort of established and formalized it. And I feel like that system works well, right? There's innovators that can innovate, and then you kind of the regulator comes after the fact and says, blesses it a bit more formally. Final quick thing on that, I don't know if everybody saw, but the same Chris Woolard who did that review of BNPL was yesterday named what's the name? The wholesale digital assets champion, which I think is good for crypto. I love that in the US we call our guy David Sachs the crypto czar, which is like kind of a cool Hulk Hogan kind of name, right? But in the UK it's the wholesale digital assets champion, which is very appropriately British, I feel like.
Informally, he'll be called the crypto czar.
Yeah,
probably,
I hope so. I hope so. I want a Chris Woolard, David Sachs cage match. That'll be good.
We'd all like to see that. Alex, maybe just changing tack slightly, in terms of your engagement with the FCA around innovation, can you give some perspective on how you found them in terms of innovation of new products, new technologies?
Yeah, sure. So just briefly, Salad, we use open banking data to underwrite consumers in terms of providing consumer lending, so primarily personal loans. And that has been, even that as an approach, not using traditional credit reference agency data has been, is atypical. And we've had a really strong proactive relationship with the FCA around ensuring that meets the requirements, that we are evidencing that we're delivering good outcomes for consumers. I think interestingly, we're now looking at broadening our product offering beyond just personal loans. We're looking at a credit card offering. Really, again, around the similar principle of access to credit for those who are typically locked out of mainstream financial services and access to credit. And really interestingly, been working with the FCA innovation team on that. So we're looking at a new business, new regulatory permissions, authorization, and the tools that they're offering now on the innovation pathway, digital sandbox, regulatory sandbox, from our perspective has been great. We've flushed out issues early and quickly. We've worked through them collaboratively with the FCA. They've given us informal steers. It's not advice, informal steers. But it's been incredibly helpful, and I think a real learning for me that I'm now advocating to others is that early engagement with the regulator, access the tools. They are trying to change and evolve, and ultimately their tools will only become better the more organizations, fintechs that embrace and use the tools, and then they can take the learnings and build them in. So, my side, having recently progressed through to regulatory sandbox for that business and product line has been really positive.
And Becca, do you see your clients wanting more from them in terms of support for use of new technologies and innovation?
Yes, I think there's been some really good important progress over the last 18 months. If we think about the establishment of the OFI within Treasury, and the way that the Office for Investment is now working with the FCA in the room, Treasury and other regulators in the room, that would have been unheard of in the UK 4 years ago. I remember sitting down with HMT officials and constantly saying, could we have something that looks a bit more like Singapore, where we have both innovation and regulation in the room at the same time? And they would look at me and say, it's never going to happen in the UK. Well, absolutely, it is happening in the UK right now, and it's really making a difference. And that progress is great, and it's really good for market entry, for players who've established elsewhere and are now looking at bringing the UK into their mix. And it works really well at the smaller end or early stage innovation. I think where we still see firms and businesses looking for more is in that scale up, either where the market itself is scaling at pace and it's a product that takes off rapidly, and with the way that technology is advancing at the moment, we see more and more examples of that, where we still think there is often a disconnect between the conversation that we need to have with the regulator, which maybe goes beyond steers, and into actually we need some regulatory clarity early, but we don't need 5 years of policy making and a perimeter expansion and RAO being implemented. We need something that sits between those two. And I think for me, that's the gap we've still got to address. The OFI's been great, the scale-up unit's having a real impact, but there is a layer that sits above that where we still need to think about how we can do more.
Right, maybe just moving, we've got a few minutes left to talk about the international environment. I'm going to come to Chrysty next, maybe to ask about Chrysty, other things you see from other regions where Block is active, where you feel like there are things the UK could learn in terms of, things that might influence positively boardroom decisions to make investments, or do you feel like we're already kind of top of the class in this regard?
I feel like the UK is really like a gold standard in a lot of ways for. I think there is a balance between regulatory certainty and trying to move quickly, but that wait-and-see approach has also benefited us in a lot of ways because we are able to move through those sandboxes. We're able to have that early collaboration, and rather than rushing to regulate something that is unfamiliar, we've got that time to collaborate and talk through the potential outcomes. And for us, particularly on the BNPL front, I feel like that has been a good case study for us, because over the last 12 months, we've been working closely with the FCA, we've been talking through those outcomes, and while the FCA was one of the first to say they would regulate the space, being able to see how New Zealand or Australia or other countries have done it on a principles-based, more proportionate level is something that the FCA could follow, but overall it's felt like a much more collaborative approach that in contrast to other areas internationally. So I do think it's been really, for us it's been quite beneficial.
And Portman, how about your perspective?
We recently started getting all these MTL money transmission licenses in the US, and it's been an interesting contrast because you go state by, for those who don't know, you go state by state. So we're like 38 out of 50 of the way there. And it's been so remarkably fast in the US. So, Utah was our fastest state. It was 12 days from the time we applied until we got our license. Missouri was in second place, 21 days. Even the worst, which was California, where we're both from, everybody was like, California's gonna be so bad and horrible. It was freaking 38 days from the application being filed until I think they faxed us our license, which tells you a few things.
We're fast on technology in California.
Yeah, inventor of the transistor, right? But it was so incredibly fast, and an interesting point that our compliance team came up with was that I think is relevant for the UK. And meanwhile, by the way, in the UK, sometimes it can take 45 days to even get your case officer assigned, which is not a ringing endorsement. But an interesting thing our compliance team saw is if you plotted, sorry, this is nerdy, but if you plotted the cost to apply against the time that it took, it was actually the most expensive jurisdictions that were fastest. which makes sense both because they have more resources, but also because it keeps out the crap. And I think one of the big problems with the UK is that it's so easy to apply and so cheap that the poor FCA must be inundated with all these low-quality applicants. And one of the things I think they could learn from other jurisdictions is just make it a little bit harder to apply, and you could get the speeds up significantly. I feel like right now the UK might be the gold standard in some ways, but it's also one of the cheapest places to get regulated, which is probably not bragging rights. Like, you wouldn't go to a party and be like, oh yeah, we're the cheapest regulator, right? So that's been one interesting lesson for us over the last few months.
Yeah, interesting, because the perception of getting lots of MTLs is always, oh, it's going to be really difficult because you've got to do it times 50. But actually, if you can do it times 50, but it takes 6 weeks concurrently, then it's a bit of a different proposition. Nitesh, what about your perspective in terms of comparing and contrasting with your other regulators?
So the one area which I think the UK is very good at is profitability. So every company, when they're starting out, most of them aren't profitable. In the UK, as long as you're well capitalized, as long as you treat your customers fairly, as long as you are doing all the right things, and you've got big financial backers, the regulator doesn't care if someone's pumping money into the company to make it survive, and you're effectively giving a subsidized service to your consumers. Other countries do. So we always operate in Italy. They do care about our profitability, and when we get to profitability, and they're a lot more concerned. And I think part of that is the risk conversation that Rebecca mentioned earlier. I think in the UK, we are prepared to allow people to take that risk and say, you know what, it's your money. As long as you're doing everything right, take the risk with money. And I think the area where we're really bad at risk, actually, in the UK is, so you have companies that start up in FinTech, and they have great ideas, and they start up, and you've probably all seen them or been part of one or led one. And then eventually, like, okay, we need to get some more compliance and risk people in. And then you hire somebody, and they come in, and like, no, you put all sorts of controls in and stop growth completely. And then like, oh God, okay, we're doing everything wrong, and then growth just stops. And I think there's a whole community of people in my world, unfortunately, risk and compliance, which they don't really care about the growth. They just care about stopping things happening. And I think that's the thing that holds the companies in the UK behind, whereas actually the regulators are a bit more flexible. I think they're like, okay, well, if you're going to waste your own money on this kind of stuff, just do it. We don't really care. It's your money. But I think there is an entire community that we need to talk to and say, guys, you're in a FinTech now. There is risk. If you're not happy with the risk, don't work in a FinTech.
Very good. And because I can see there's a flashing red clock, maybe just in 15 seconds, if anyone wants to, if there's one thing that you could ask for or one thing we can do better that you could make a special request, what would it be for each of you?
I'll go first. So I've all day I've been talking to people from the FCA, and I would just keep encouraging them to bang the drum and drive as much awareness of the tools that they do have. I think they've actually got some amazing tools that can accelerate innovation, accelerate authorizations. I think the challenge at the moment is awareness. So innovators aren't necessarily accessing those. So that would be my point of encouragement to the FCA.
I mean, I think I would similarly say that the early collaboration, but actually using the tools to see how they impact our customers, not just thinking about the tools themselves, but actually playing with them, experimenting with them, and using them. That will give you a better sense of how they may play out from a customer perspective.
I think thinking about what comes next after the sandbox, what can we do to aid scale up beyond the sandbox? It might be hold harmless, it might be something similar to that. There are regimes out there, and we need to think about the next wave of innovation for us as a regulator.
I'd say that when you're thinking about policy, don't try and aim your policy to the 1% that find it hardest to understand everything. Actually, you need to have some bar and say, you know what, we're going to... there's a balance, right? So you either have fast growth and innovation, or you have every regulation to the person who's never going to understand it, and the worst case scenario. I think that at some point you need to say, actually, we're going to, below this level, we'll support you, but we don't expect firms to go to the worst case scenario, the person who can't do it, can't understand anything. So there is that balance in customer duty that we need to think about.
I said mine. Let the people have their wine, yeah.
We're there. Well, thank you very much to the panel, and well done, and thank you to all of you for staying to the end. Thank you very much, and see you soon. Thank you.